And to our first conversation now, Dangote Refinery recently announced a temporary suspension of petroleum product sales in Naira, opting instead for United States dollars for transactions. Now, this development follows the expiration of a 6-month Naira for crude agreement between Dangote Refinery and the Nigerian National Petroleum Company Limited. Now, the agreement initiated in October 2024 allowed Dangote Refinery to purchase crude oil from NNPCL using the local currency. It was designed to stabilize fuel prices and ensure a steady supply of petroleum products within Nigeria's domestic market. However, in March 2025, the agreement ended, leading to Dangote Refinery reconsidering its sales strategy due to supply challenges. Refinery spokesperson stated that obtaining crude in Naira became difficult, prompting the decision to halt Naira transactions temporarily. The shift is expected to impact petrol prices and could further weaken the Naira as traders seek US dollars for transactions. And in response to this, Independent Petroleum Marketers Association of Nigeria and other concerned parties have expressed concerns over the policy's impact on fuel distribution. Well, let's start our conversation this afternoon. I'll be talking to Mr. Olumide Esan. He is a partner and energy chemicals leader at Deloitte. He joins me live to start this conversation this afternoon. Good afternoon, Mr. Esan. It's good to have you on the program.
Yes, good afternoon, Tolu. It's great to be here this afternoon.
Yeah, I think we should start with this Naira for crude saga. It's the biggest story in the news around the industry. When it started in October last year, it seems like we're getting to that point where Nigeria saw a bit of respite. The price of PMS started to dwindle, talking about that. But we've had a series of arguments around this. First, let me ask your own position around this before we delve into some positions also that we've seen around this very development.
All right, thanks, Tolu. I mean, for me, first I want to dwell on facts. As you rightly alluded to, the contract was for an initial period of 6 months between NNPC and Dangote. But we must realize that regardless of the contract design, you must have the crude oil available. Yeah, so we found ourselves in a situation where there is insufficient crude oil on the part of NNPC to be able to sell to Dangote in Naira. Like you see, the contract expires end of this month, but the good thing though is that they are talking, and it's most likely they strike another deal. But we must not forget that NNPC had done quite a lot of forward sales of its crude on behalf of the government. So the loans have been taken, the loans have been used for different things by the government. But yet, it's time to pay back with some hundreds of thousands of barrels on a daily basis. We must recognize again that crude oil is an international baby. Okay, so the official currency is USD. So if we're going to be trading in Naira within Nigeria, that's perfect because it helps the local industry. But the Naira contract is useless without crude oil available from NNPC to sell to Dangote. There is the domestic crude oil supply obligation under Section 109 of PIA, which each party is meant to comply with once you've been issued your share of the domestic crude supply obligation. But Section 109 envisages a willing buyer, willing seller case. Yeah, and I personally struggle to see how any of the producers will be willing to sell in Naira. I think most of them would like to sell in dollars. So we as a country needs to go back and see what we can do differently. Clearly, today we are producing, 1.6, 1.7 barrels a day. If we are able to achieve, federal government's budget, which is 2 million barrels a day, maybe there will be additional headroom for NNPC to be able to sell crude in Naira to Dangote refineries.
All right, then. That's a good way to start this conversation, really. So would it be right to say that some of the, should I say, contractual agreements, obligations of the NNPCL, maybe with international parties and all of that, is the reason why we can't get enough crude in country?
So It is not that we can't get enough crude in the country. I think it's also partly because an average producer wouldn't want to sell in naira, and because the bulk of their spending on drilling, on exploration is USD, and which was why it was NNPC that was interested in signing the crude supply in naira deal. Yes, our production has improved from 1.4 million barrels to around 1.650, 1.7 now. But yet it's not enough. If you look at Dangote Refinery, 650,000 barrels a day. Please, if you add that to NNPC's 4 refineries of 445,000 barrels a day, you're almost looking at 1.2 million barrels. NNPC doesn't have that much equity. Of the 1.7 million barrels being produced now, at best NNPC will have 50% of that. So there is a fundamental shortage here of what is available for NNPC to sell in naira. So for the other companies, independent companies, they do a lot of forward sales agreement as well. A lot of them have committed their crude into the future with particular trader in Europe, in Asia, in North America. So it's not always easy to break off those contracts. But the best that NUPRC can do is to leverage on Section 109 of the PIA, assign local production supply to each of the operators. But then NUPRC cannot force them to sell in naira. So I think that's the dilemma.
Well, let's go back to the downstream in its entirety. I know we had you on this program before, the deregulation and all of it. But considering the PIA, which you cited in your first response, how well are we following through? Where are we post-deregulation?
So if you're looking at the downstream, there are at least two significant changes we've had since the passage of the PIA. One is that NNPC no longer have the exclusive right to bring in petroleum products into the country or to buy from the refineries. It's now willing buyer, willing seller. Anyone can contract with Dangote and buy from. So if you look at it in that space, that is significant improvement from where we were before, where NNPC had to always incur the cost. The second bit is this: NNPC no longer sets the price. In the past, NNPC sets the price and absorbs the shortfall. But now we are seeing compliance with Section 205 of the PIA, where it is all market-driven. It's market-reflective pricing that we see today. So I think there has been improvements since the deregulation. And of course, we have the government investment in CNG. Everybody is trying to, over 100,000 vehicles have been converted to CNG. Okay, so making the downstream work has been a priority, and we are starting to see some rewards in favor of those efforts that have been put into it.
Crude oil prices increased, of course, increased local production. That means geopolitical tensions are also some things that we should stay on. You know, we've seen, like we always say, drill, 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 according to Donald Trump, and everyone believes that would maybe drill. That would definitely impact the entire market and all. And some say we might even get a glut, and it might affect prices moving on. What is your take with regards to this and the entire market moving on? That's the crude oil market now in its entirety.
Yeah, I mean, I think it's a very valid point that we should be worried about. On the one hand, US wants to flood the market with additional production. They probably are doing already above 13 million barrels a day. Today, the price is about $73 per barrel. And the reality is it should be fetching some decent money for us as a country. I'm hoping that there will be stability in the market later this year, because there are hiccups already, like you mentioned, geopolitical tensions. We have the Iran issue, which the US is about to reimpose stricter sanctions, and then they won't be able to sell at full capacity. And then we have the Ukraine-Russian war as well. And now we have Venezuela. If Venezuela also is unable to export because US wants to sanction anyone that trades crude oil with Venezuela, all this together, analysts are predicting that crude oil price, like the Energy Information Agency thinks it will be $74 on the average this year and $66 per barrel next year, 2026. OPEC on its side believes also that it will be $74 per barrel this year. Of course, in Nigeria, we have set our budget benchmark at $75, so we need to watch the space. I'm hoping that the overall there will be a balance at the end of the day. Sanctions in Venezuela, they can't produce full capacity. Iran can't produce full capacity. There is the issue around Russia and Ukraine, but US intends to pump more into the market. There's no shortcut to this. I'm not sure they're able to do that this year. Maybe from 2026, because it takes time actually to get production to the wellhead. So we are in a very volatile situation right now, and we just need to collectively try and watch the space.
Interesting one so far there. Now, let's look at all the back and forth that we've also had. We're not being political now, but just looking at the pipeline rupturing and all of that we've seen. It's too early to start to see what impact that could have on the market. But if that continues, what does that mean for us as a country? I'd like you to make us understand that.
If you're referring to, vandalization in the Delta, it's continued, even though reduced in terms of, the frequency, but then we've continued to experience these, different issues, not just on crude oil pipeline, but also on gas pipelines. And so the danger is this. We've just concluded a raft of takeovers in the industry, Renaissance, Seplat taking over, Mobil producing, Chapal taking over for Equinor. These new owners ordinarily will be hungry to invest, but they can't invest if the impression they have is that, they're going to invest, replace aging infrastructure, and then we're going to have this infrastructure vandalized all over again. So it is not good, and it has to be addressed. It has to be addressed decisively. If we would achieve what President has set for himself to achieve, 2 million barrels this year, then quite a lot needs to be done in the area of security. We must secure these national assets.
Very important there. I know we've always talked about gas and the opportunities we have in that space. Federal government's drive towards even the CNG initiative and all of that is something that is gaining traction by the day. But to you, the efforts and challenges that we face in that market, in building infrastructure and all of that for gas production, how far have we also gone with regards to that?
Okay, so thanks, Olu. I think in the world where we believe Nigeria is a gas province, it's important to always ask this kind of question so we discuss it. Recently we've been seeing attacks on the gas pipelines, which is quite unusual because you can't siphon the gas. So for some strange reasons, that is not encouraging. But again, production has been shut for some time now. Even LNG is no longer operating at full capacity because there's not enough gas to go around. So I think what you will see is that government then launched a number of initiatives, including providing special incentives for people to explore and produce non-associated gas onshore and shallow water. And they followed through also in October by releasing a for deep water. What you will notice is that these incentives are in the form of tax credits, largely. So in other words, government is trying to turn around the economics of this project, which is one reason why investors have not really pumped money into it before. They say it's not economic. In other words, no investor wants to use $1 billion to develop an asset only to sell gas of 800 million. So for it to work, it must meet the order rate of these different companies. It must be profitable to them, which is why these incentives have come into play. And of course, maybe in another 2-3 years, we start to see the significant upside of these incentives being put in by government. Today, we have a number of LNG proposals on the table, some even floating LNG. Again, I think it was last year that AGPC commissioned its plant. That is the ANOH gas processing company, which is owned partly by NNPC and partly by Seplat. That plant is going to inject has capacity to inject 300 million SCF per day into the Nigerian domestic market. That is huge, and that is from the processing plant perspective. Again, last year, you must have heard the major FID that was taken last year. One of them was the Better Field by Total Energies, which also is going to cost like $550 million, but will end up being able to produce gas of 300 million scoff. Now, for me, it's a case of listing down all these incentives and then assessing how effective they are. They are effective, but maybe they can be more effective. Remember, we have a national gas empowerment program wherein there's a $250 billion endowment to promote uh, gas infrastructure in the midstream. So, and downstream. And this, the number of companies have tapped into it. But all these are geared towards moving Nigeria away from oil into gas. The other time we spoke, I did mention the Decade of Gas initiative by the government, which is looking at some prolific assets, which, if developed, will liberate us and we would have a lot more gas to play with. We'll be able to fill our LNG trains, even the new ones that are coming, that will come on stream much later. And yet we'll be able to export and make some dollars from this gas infrastructure. It's the way to go. And I think that we must make the upfront investment. It is expensive, but we have to just make the investment as a nation.
All right, now, before I let you go, we still flare gas almost finally on this conversation. And we've had a series of deadlines and all of that. When are we going to stop flaring gas, at least reduce gas flaring in this part of the world?
I mean, that's sort of an interesting question, Tolu, because the unsaid part of the story is that over the last 2 decades, Nigeria has cut almost like 85% of its flaring. But we're still flaring anyways, but there has been significant improvement. And there is a framework right now where if PRC is granting licenses for people, you can take the stranded gas, which hitherto will have been flared, and convert it into useful products. So I don't think government is backing down on that. I think it's good for the health of the nation. It's good for Niger Delta, to abate this gas flaring. But it can't be fully eliminated. It can only be reduced. And it's my interest to also know that, at least for now, there are no new projects being sanctioned unless there is an associated gas solution coming with it. So in other words, NUPRC will not even approve your project if you don't have a gas solution that will enable you to convert the associated gas into useful form rather than burn it and remove the soot to the environment. So it's a difficult case, but finally I think we're headed towards the right direction. Do I like the pace? No, maybe not. But do I think we are going somewhere? Yes, I think so, because we have so much gas. And you remember, Nigeria is energy poor. Only 55% of citizens of this nation have access to grid power. And I'm not saying 24 hours a day. I'm saying even if it's just 1 hour a day. Some research work that we did globally in our firm, we could tell that in the whole of Nigeria and West Africa as a whole, only 14% of citizens have access to clean cooking fuel. I'm talking about LPG, CNG, electric cooker, and the rest. Remaining, 86% thereof are still using biomass. Go to the village, people are still using, woods and all of that to cook. So we can produce more gas, generate more power, and then make available to our citizens. That is how to improve the quality of life. But I must admit, it's a journey. But I'm just hoping that government will keep on track, in terms of what they have committed to do with the Nigerian vast gas resources.
Keeping on track is really very important. Maybe in 2 minutes, our time is up already, but just to wrap this up, what is your outlook generally for the industry, considering all that we've talked about?
I think there is a resurgence in the industry, and I also note that increasingly the Nigerian independents are, having a larger share of what is being produced, particularly in onshore and shallow waters. For me, I do agree that this year we should see oil thereabout on the average $74 per barrel. But I think that may increase next year, if China recovers fully, India recovers fully, we'll see increased demand for fossil fuel, if not in the form of crude oil, in the form of natural gas or LNG. So I think the outlook is uncertain, but there are elements of prospects that we can see if we continue the trajectory. I particularly like the incentives that were issued last year by the executive orders of the president to address some roadblocks that typically hold back projects, including contracting through NCDMB, contracting through NNPC NAPIMS. Those were streamlined last year as part of the executive orders, because there were two of them at least dedicated on that. So we're hoping really that we can implement projects faster in Nigeria. And crude oil is finite. One day people will migrate away from crude oil. So we need to monetize our reserves right now and use that money to develop the rest of our economy.
Indeed, Mr. Olumide Esan is a good place to live it, partner and energy and chemicals leader at Deloitte. Thank you so much for your time on the program. We always appreciate you.
It's my pleasure. Thanks, Oli, for having me.
All right, then now.